Before we start off with this video, I would like to show you about Quants League. This is an option trading conference which is one of its kind, and top industry experts such as Rajendran Sir, Nitesh Narang, Prateek Singh. So all these people will be joining in and they will be having sessions. So this has already been started, and if you haven't yet registered, then do check this out and register as soon as possible. So for the sessions which are already over, you will also be getting the recording. Hi guys, welcome to another video by Optionables. My name is Saket, and in this video we are going to review the current positions which we are holding, and then we are also going to see how exactly is the payoff for the same. Post that, what we'll be doing is we'll be trying to analyze the market data and try to see how we can better our position tomorrow, and finally we will also see what we are expecting from the market in the coming day till expiry. So we have a couple of things to cover, but it is going to be a pretty concise as well as a short video, and we'll be quickly proceeding to the same. Right? So as you can see in today's trade, we really didn't gain or lose anything. So we just gained around 12,000 M2M, and this is the trade which we have been holding from almost 2.5 weeks. So if you go behind to any video around 2 weeks back, you will find these positions open. And post that, a lot of changes have been made to these positions. It was initially started as a ratio spread, later converted into a bull call spread, and some more positions have been added. And post that, the payoff currently looks something like this. So you can see that on the upside, we have kept it completely open. So no matter where the market goes, even if it moves towards 38,500 or 39,000, we are going to get a flat profit of 3.14 lakh. So there is nothing much to worry on the upside, but what we have to really focus is on the downside. So on the downside, if the market is moving towards 38,000, that's where we have our highest profit or max profit of around 7.17 lakh. And our break even is going to come in at 37,427. So on the upside, we really don't mind. So let it go wherever it wants. We are going to get a flat profit of around 3 lakh. So first we will just discuss on how we can improve our payoff on the upside. So in case if the market is moving up, how can I make this 3 lakh move towards 4 lakh or 5 lakh? So that is what we are going to discuss first. And then we will move on to discuss what if the market goes down tomorrow, what exactly we will be doing. Coming to the first point of discussion, how can we actually increase this 3 lakh into 4 or 5 lakh? So again, I will just show this to you. Even if the market moves towards 39,000, you can see that we have a flat profit of 3.17 lakh. To tackle this thing, first we have to look at the current position. In this particular position, we can see a single contract that is 36,000 PE, which is trading at 15 rupees, where I have 2,000 quantity short, 2K quantity short. Now, if you look at this and think about it, does it really make sense to hold 2,000 quantity of 36,000 PE? I actually shorted this when the market was around 37K 1 week back. But today, the market has shot up to 38.2K, almost 1200 points, and I'm still holding these two puts, that is 2000 quantity of puts. So obviously, for me, it is right now not making a lot of sense to carry this position anymore. So I will close my 36,000 puts, and I will be moving in towards 37,300 or 37,500 puts. So this would be my most obvious shift, because once the market starts heading upwards, so you would see some support coming in at 38,000 for this expiry, and 37,500 would be a good option to short. So right now it is trading at 98 rupees. And this is trading at 15 rupees. Assuming that tomorrow I will be able to close this and shift towards this, so I won't be doing that right away, only if market shoots up and we see some additional put writing happening at 38,000, then I will be doing that. So even in that case, I am going to still gain somewhere close to 60 points, assuming that there will be some premium decay from 98, it would have come towards 60. So around 38 points it would have lost. And let's say this would have dropped from 15 towards 10. So even in spite of this, I am going to get some additional 50 points into 2000 quantity, which itself is going to give me extra 1 lakh profit. So this would be my first and the most obvious shift which I will be doing if the market moves on the upside. The second option is I can also come in closer with my 37,000 puts, but I will hold it for some more time and then decide whether to do that or not. So now the focus has to be obviously on the downside. So upside, it really doesn't matter. Because end of the day, wherever it goes, you will be ending in profit. Even if you don't maximize it, you will still be having around 3 lakh profit. But what really matters is on the downside. So on the downside, the thing is, the things start to get really bad if the market falls tomorrow itself. So if the market is going to take some time and fall, maybe by Wednesday end, we might still be in profit. But if the market ends up falling tomorrow itself, that too in the first half, there are very slight chances that we will be in profit. So what is the plan now? The plan is we will wait till the market first breaks 38,000. 38,000, as you can see, is a pretty strong support. So first we'll be waiting for the market to break this level. So the moment market breaks 38,000 and maybe moves towards 37,950, so we will start shorting additional call options, maybe 38,300 or 38,400. So either 38,300 or 400. We will start shorting additional call options. And the moment it falls below 37,800, even though my break even is coming somewhere close to 37,427, so this is the break even. In spite of that, we are going to cut off all the positions moment the market breaks 37,800. So this is our max cutoff price, what we are holding it till. So below this, we are not going to hold any positions and we are going to come out of all the positions, because as we approach our break even, so more and more closer we come towards our break even, it becomes much harder for us to adjust this particular position. So even though tomorrow, if the market is coming to 37,800, you can see that Sensible is not showing me a huge loss. It is showing me a loss of somewhere close to 1.5 lakh. So this is considering that the additional call options have not been shorted. And if that is the case, I would be happy to take this loss and come out of this position. Because as we move down, you can see that the loss just starts multiplying to a great extent. So you can see that if I don't cut off my position early and let this run, my loss from 1 lakh becomes 4 lakh, then to 6 lakh, and it just goes on. So it's very crucial for us to know when exactly we should be out of this particular position. And for us, the level is 37,800. So that is for the trade plan what we have. Coming to the market data and what we can actually expect from the market. So today we saw some huge amount of put writing and some amount of call writing. So we saw a lot of unwinding of calls happening at 38,000. So most obvious question for us would be to ask, why are people closing their call options? So the most obvious answer to this would be people now, whoever had bet that market will not go above 38,000 are now closing down their contracts, because that's the obvious reason why you would sell a 38,000 calls, because you're not expecting the market to go up. And now people, not just that, they started shorting additional puts, which means now they are expecting the market to stay above 38,000. So we can see that a lot of short straddles have been created at 38,000. So most likely the market will end in the range of 37,500 towards 38,500. So this is the most likely where the market would end. But what happens tomorrow to the OI is really crucial. In case if the market shoots up and we see a lot of put writing happening at 38,500, then we can expect a much broader range for the market on the upside. And similarly for the calls, tomorrow let's say there is a down move and we see a lot of put unwinding with lot of call writing happening, then we can expect a little downside for the market. So that is the current expectation as of now. A lot of short straddles have been created at 38,000, and 38,000 might also act as a strong psychological support on the charts. Open interest front also, if we see some strong put writing coming in tomorrow, then we can expect 38,000 to hold this expiry. So it is very important for us to see what exactly happens tomorrow and how the OI data is changing, right? So we'll be joining in again tomorrow to review the current positions, and since we have already discussed couple of things what we would be doing, so we will also see what exactly did we do and how the new payoff graph also looks like. So in case the market ends up going down, then we will close our positions with a loss. Hence it becomes very important for us to see what actually happens tomorrow. With that, we also come to the end of this particular video, and I hope that the positions were clear and the idea what we'll be doing tomorrow or the trade plan what we have is also clear. So if you're liking the content on this channel, then please do hit the like button, share as well as subscribe. Thank you so much for joining.